Good day traders and investors, welcome to our next technical market update. In this video we're going to discuss a few setups that may give perspective for the following week between the 27th of November 2023 and 1st of December 2023. Before we discuss the new setups, let's quickly give a check to the 4 setups that we discussed last week. Over here on the screen you have the 4 setups the way that they were at the time in which we discussed them. Let's first give a check to the goat. Last week we discussed that the goat was forming a beautiful inverse head and shoulders. It had already produced a breakout and the price was retesting the neckline. This setup was giving a potential target of the price going to a bit over 2010. Let's see how the price developed during the previous week. So what happened? Immediately after the market opened, the price dropped below the neckline, climbed up above it, then dropped down again. The price then fell down to the 50 simple moving average. The price after that started going to the upside. Couple of things that could confirm that over here we got the breakout that we needed is over here you could draw a temporary downtrend line which the price broke over here and again managed to climb above the neckline of the inverse head and shoulders. Additionally, this drop right over here came into the region of the previous major high point right over here of an uptrend market structure that we could observe from the low point of this inverse head and shoulders. The increase that was initiated after that took the price up to $2,007, getting very close to the target set from this formation. The price after that did a corrective movement down to around 1,987, but then started climbing up again, closing at a bit over 2,000 before the weekend. Couple of important things to point out over here. First one is that on this correction the price tested the 50 moving average twice. The second thing is that in the process it formed a double bottom formation located right over here. It broke above it, retested it and gave an indication for an increase before the market closed. If you've entered this trade, monitor early next week, as this technical formation over here gives decent chances of the price to continue moving higher towards the target set from this inverse head and shoulders. Next one we check is the analysis on the Dow Jones. Over here the price was forming a couple of potential bearish patterns. One of them was a rising wedge, the other one was a double top. But at the time of the closure of the market, none of them had given an entry. We discussed that in order to look for a further downside and a potential drop in the range between 34,300 and 34,400, the price needed to go down and close below this red range over here, which was acting as the neckline of the double top. Alternatively, we discussed that if the price goes up and breaks above this upper red range, then we can look for a further upside. Let's see how it developed. You can notice that over here we got the second development. The price went up, broke above this resistance range over here, dropped down to retest it, and then continued moving to the upside. After the breakout and from the point of the retest, the price produced an increase of about $350. Monitor the price next week as the movement can continue to the upper side, but keep in mind that over here with those recent movements the price had set conditions of another possible rising wedge that looks like this. I'm going to remove the old lines just so that you can see it better. It looks like this. Monitor this one closely if you've entered with a buy trade on the Dow Jones. If the price continues sitting above this bottom uptrend support line and above the 50 simple moving average, then it can continue climbing. If it goes up and breaks above this uptrend resistance, then this can be even more indication of a strong upside momentum. If however the price goes down and breaks below this support and also below the 50 simple moving average, this may indicate the possibility of a reversal to the downside. Next one we're going to give a check is the double bottom that we were discussing on the pound dollar. Over here we had a few things. We had a general bullish market structure, a correction in the price down to the 0.382 Fibonacci, and a formation of a potential double bottom. Let's see how this one played. This one went by the book. You can notice that the first candle after the market opened was also green, giving a very good entry. From this point, the price managed to produce a further increase to the upside equivalent to about 148 pips or 1.18%. You can notice that after this initial increase, which actually met the target from the double bottom on its own, the price made a correction which would have taken this trade into a bit of negative, but assuming that you took a buy trade over here and you had a wide enough stop loss, this trade provided conditions for a risk to reward ratio of over 3. Last one to check on, the Bitcoin that we discussed. Last week we were awaiting for a very important decisions from the SEC in the US regarding a new spot Bitcoin ETF. This decision was delayed, which kept on keeping the price stuck in a period of some uncertainty. The decision is now expected to be announced sometimes in the early months of 2024. This week, however, there was another blow to the crypto industry. Changpeng Zhao, founder of Binance, the world's largest cryptocurrency exchange, has stepped down as a CEO and pleaded guilty to violating anti-money laundering laws. The deal he took with the United States Department of Justice is part of the largest settlement that involves several federal agencies and will include fees of more than $4 billion. At the moment, we are still waiting to get some more news on the future of Binance and the official stepping of its new CEO. The way that this is important for the price, however, is that this period of uncertainty continued. Look what happened. So after the analysis we looked at last week, the price went up, tested the resistance, dropped down, tested it again, a bit of a smaller drop, and then went up, producing what may end up being over here a false breakout. The price continued to the downside during the weekend, and at the moment it's very important to monitor it closely and see how it develops in this region. One possibility is that this over here was a false breakout to mislead the buyers that the market may continue moving to the upside, and then this correction to the downside is now bringing a lot of uncertainty. For a possible movement to the downside, you need to look very closely for the price breaking below this low point right over here, located at around 36,900. If the price goes down and breaks below this, in the short term it may test the 35,600 or possibly even again drop into this support range between 34,500 and 34,900. If however the price manages to stay above this line over here and instead it goes up and manages to make a higher high over here above 38,500, then this can unlock the doors for the price to go up and target the range between 40,000 and 42,000. Monitor very closely in the following days. Let's now go ahead and discuss 4 amazing setups that will give you a lot of perspective for the next few days. The first technical opportunity we'll discuss for the next week is on a 1-hour chart for USDJPY. If you give it a check, you will notice that the price has been fluctuating up and down, forming lower highs and higher lows, which gave conditions of a symmetrical triangle. Now, those of you familiar with chart patterns should know that this technical pattern is considered to be neutral until it provides a breakout. What does that mean? If it goes up and breaks above the resistance, then it can produce an increase, and if it drops down and breaks below the support, it can produce a drop. The possible movement that the price can produce is equivalent to the distance between the lowest and the highest point in the formation. In this case, that's about 116 pips. Let us check how this can look in both scenarios. So, assuming that it breaks to the upside, it would be something like this, giving you a target of around 150.81. And if it breaks to the downside, it would be something like this, giving a target of around 148.21. Now, before we discuss those scenarios, let's look at the bigger picture. You can notice that recently the price of the dollar yen had produced a very strong swing to the downside, and then it reversed to the upside, getting a substantial recovery and then going in this sideways consolidation period, which is giving us the triangle. Over here, as you can see, we're having Fibonacci levels. You can notice that the price has been fluctuating exactly in the golden zone between the 0.5 and the 0.618 levels. You know that when it comes down to the Fibonacci, the golden zone is one of the levels on which the price can reverse most frequently. This means that if over here the price breaks below the support of this symmetrical triangle, it can align with the Fibonacci golden zone, which can provide more confidence for the price moving to the downside. Even though that is the case, there is one extra thing that's supporting a bullish scenario. You see, when you have a symmetrical triangle, the setup provides more reliability if the breakout happens in the same direction that took the price into the formation. So over here we're having an increase that took us in this symmetrical triangle. This means that according to the pattern itself, if you get a breakout to the upside, this can be more reliable. But even though that is the case, over here you are not getting the support of the Fibonacci retracements the way that you get for a bearish setup. Finally, we're going to include a couple of moving averages. That would be simple moving averages with a period of 50 for the blue line and a period of 200 for the red line. What is very interesting is that if we zoom in on this setup, you can notice that for the past few days, the price has been fluctuating exactly between those two. The reason why this is so important is because if the price goes down and breaks below the triangle, it is also going to close below the 50 simple moving average. But if it goes up and breaks above the triangle, it is also going to close above the 200 period simple moving average. No matter in which direction this goes, the moving averages are going to provide extra confluence. Finally, to be a bit more precise for the entry, because you have so many important levels, you can try looking for a simple breakout out of the triangle, either up or down. But if you want to have a bit more certainty, you may want to wait until the price moves past specific Fibonacci levels. If it breaks to the downside, it would be good if it closes below the 0.5 Fibonacci. If it reverses, goes up and breaks to the upside, it will be good if you wait until it closes effectively above the 0.618. For this next setup, we're looking on a 4-hour chart for EURGBP. The price itself has been forming a very obvious falling wedge chart pattern. If, however, we zoom out, we can notice that the price has also been moving in a very strong and very obvious general uptrend channel. With the last couple of candles before the market close, we can notice that the price managed to close below this general uptrend support of the channel. Now, it is possible for the price to truly be reversing the trend. If that is the case, technical analysis right now doesn't provide a lot of confirmation, but there is also a scenario in which this drop below the general uptrend support is just a false breakout. This means that the price can still reverse and produce a strong increase. Now, for that scenario, you have a lot of potential confluence and perspective. If we look at the RSI, you can notice that on the 4-hour chart, it closed below 30, meaning that it's getting in the oversold region. After the market opens, what you'll be looking for is a potential reversal in the price and close above this general uptrend support and also above the resistance of the falling wedge. Something that will look like this. If the price reverses to the upside and it closes candles above this general uptrend support and above the resistance of the falling wedge, this can provide a 4-confluence analysis suggesting a potential increase in the price. What you have is falling wedge potential breakout, oversold RSI, general uptrend channel, and also the price has entered a horizontal support range that looks like this. This one monitor very closely as soon as the market opens. Next one, 4-hour chart on NZDUSD. This is a very interesting one. You can notice that the price is forming a very obvious rising wedge. This rising wedge has entered a resistance range which has been created from multiple low points, high points and periods of consolidation. You have consolidation here, low point here, consolidation here, couple of high points over here, and a retest right now. Another very important thing in this specific case is that over here you're getting potential divergence with both the RSI and the MACD. Let me show you. Here's how the candles on the price have been closing. Here's how the high points in the RSI have been looking. And here's the high points in the MACD. Now, for those divergences to be valid, it's very important how the price is going to develop in its early hours. You see, if after the market open the price actually goes up, and over here the RSI goes up to surpass this previous high, and the MACD line goes up to surpass its previous high, then the divergences will disappear. But if the price starts dropping down and breaks below the support of this rising wedge, then very likely both of those divergences will be confirmed as valid. Finally, another thing to look out for, if you add the 20 and the 50 period simple moving average, you will notice that the two lines are getting close to one another. If the price drops down, breaks below this support of the rising wedge and confirms the pattern, those two lines can cross very soon, providing an extra confluence. The last setup for today is on the FTSE index. On the 4-hour chart you can notice how the price has been forming a very obvious symmetrical triangle, and with the closure it even produced a couple of candles above the resistance, which indicates a potential breakout. What makes this analysis even more interesting is that if we look at the bigger picture, we can notice that this small triangle has formed in a much larger symmetrical triangle. The price right now is located right around the middle between the resistance and the support of this bigger triangle. If we zoom back in on the price, we can also determine some possible projections. As you've seen from the first example, when you have a symmetrical triangle, the possible movement after the breakout either up or down is equivalent to the distance between the lowest and the highest point. So, assuming that we got a breakout over here, this gives a potential movement of about 150 points, which would be right about over here. A target around 7,625. Have in mind a couple of things. First one is that if the price starts increasing but this movement takes a while, eventually this resistance from the bigger triangle might end up being lower than the target from the pattern. But the other more important thing is that if you look right over here, you can notice that you're having a very important consolidation which can be taken as a resistance range. Realistically, if price goes up, the moment in which it reaches 7,580, it can start encountering resistance. Projecting the same movement to the downside, assuming that this is a false breakout and the price reverses, gives a potential target around 7,300. If the price goes down, one important resistance you need to take in consideration is this low point right over here. We will indicate it as a range as well. This range the price can encounter if it gets as low as around 7,340. Now, even though over here it seems like the price has already produced an effective breakout, this green candle looks very convincing, and this might indeed be the case. In the past year, symmetrical triangles have often been producing false breakouts. This means that there is still a possibility for the price to reverse, drop in the triangle, and break effectively to the downside. Something that can help you to determine which direction to look out for is by adding simple moving averages. We have the 20 and the 50. What you can notice over here is that while the price was forming this triangle, the 20 and especially the 50 have been supporting the price very well until this point. Something that can give more confirmation of a potential drop is if the price reverses, goes down, breaks below the symmetrical triangle but also below those two moving averages. Additionally, if you give it a closer check, you will notice that right now over here they are very close to one another, and such a drop can produce a cross in them, which can be a further confluence. Now, another important thing over here is that if we go for multi-time frame trading and we look at the daily chart, the price is currently sitting on the 50 simple moving average on the daily. This is important for two reasons. On the daily chart, this is producing some resistance, but also if the price continues up after the open and it closes above this 50 period simple moving average on the daily, this can serve as an extra confirmation that the price is indeed headed to the upside. I hope that you've enjoyed this market update and that you find it helpful. We are publishing such market updates for possible technical setups every weekend for the following week. If you want to always see them in time and make sure that you are never going to miss out on those setups, be sure to subscribe to our channel so that you can see the videos whenever we post them. Additionally, you can follow us on Instagram and TikTok for more useful content. Also, make sure that you let me know what you think of those setups down in the comments. I hope that in the following week they will be very helpful for you. I'll see you next time.